welcome back to another episode of Profitless on Purpose, the podcast that's all things nonprofit and accounting from accountant's perspective, and not just one accountant. I'm one of your hosts, AJ Wheeler, but with me this week is Tammy Hess.
Hi.
And Mark Pallardy.
Hey there.
We got a really great show. So our first article is reoccurring gifts. What are they? How do you get them? How do you keep them? We'll talk about everything reoccurring gifts. Next, we have Amazon and how they can be a resource and a funder for your nonprofit. Is it good for you? Is it good for your nonprofit? We'll talk about it and what resources are available to you. And then spinning a nonprofit into a for-profit entity. Is it worth doing? How do you do it? What are your options? We'll talk about it and have some good discussion around it. And then our topic of the week are the do's and don'ts of fundraising. What should you do? How should you do it? What shouldn't you do? And why you shouldn't do it? We'll discuss it in our roundtable. Anyway, Tammy, you got our first article for us this week?
Yeah. So I have one from Nonprofit Times titled Recurring Gifts Are Simple, Just Not Easy. The article aims to help nonprofits with increasing their recurring giving program. They reference an ebook provided by GGive, a software provider to nonprofits, that state that you need to attract new recurring donors and engage existing donors to upgrade to a larger or more frequent donation. Most nonprofits probably already have this as a goal. The question is how to do this. The article suggests that upgrading current donors is simple, but it doesn't mean that it's easy. One should build a strategy around the recurring giving program. While I didn't read the ebook that it mentioned, I did think that the 3 suggestions they provided were good ones. The first one was thank recurring donors and share with them the accomplishments. The second was to tell them why they should increase their gifts, show them how they're making a difference with their donations. And third, make the process of giving as easy as possible, whether this is by using a fundraising platform or making yourself more available to answer some of their questions. Make it easy for your donors. It's a pretty short article, but I was wondering what your guys' thoughts are on recurring donations and if you have any other suggestions on how to increase them.
I think recurring donations can be your bread and butter, right? Because most donations that come in on an individual basis are donations that can come year by year. There's a lot less effort and energy that has to be put in to finding a new donor than using your recurring donations. I think there are some organizations and platforms that do this very well. I'm thinking like NPR with their sustaining member drives, where they make it very enticing and very easy to just have your debit card or credit card on file, and they can just take a sustaining member gift every month ad nauseum. I also, as I've mentioned in the past, am involved in a nonprofit bakery, and we've considered memberships, right? Having a membership of some sort to the organization where you can, I don't know if we'd call it a membership because there are different rules and regulations around that, but having maybe a dozen cupcakes come every month if you're a recurring donor at a certain level, something like that. And I think that leverages both part of your mission and part of, the ease of reducing the burden of fundraising. If you get enough of these sustaining members, fundraising, then can be on a level and on a par where you're not just hoping at every turn, will I have enough money to continue? And you can actually plan for the future because I have this many recurring gifts. So if you can set up a platform to do this, I think it's a brilliant idea.
Well, and I agree, Mark. Just to piggyback off of what you said, reoccurring gifts like this are the holy grail of fundraising, just like a subscription-based fee is for a for-profit entity, right? It's a kind of hopefully a repeatable gift or a repeatable charge that happens on a reoccurring basis that you can count on. But I think to Tammy's point and the article's point that keeping those fundraisers engaged, because I've done it. I have, a subscription to something that I'm no longer using. And I review my charges on my debit or credit card. I'm like, what is this? And then I just shut it away because I haven't gotten any use or any update on it. So I think keeping those donors in the loop really is important. And then, like the article mentions, telling them why. Don't just think of them as money in the bank, or a reoccurring charge. There's an opportunity up there to upgrade them if they have the availability to donate more. but you have to convince them that, a larger gift is worth their giving it. So I think keeping that in mind, what this article also kind of highlights to me is you need to be, if you're a pencil and paper, old school sort of organization, you need to modernize if you want these reoccurring gifts. A lot of these reoccurring gifts are set up through, like Mark had mentioned, or myself, through a debit or credit card that, is reoccurring every month. And if you want to be able to facilitate that, you better have the subsystems in place to be able to do so. So is that through your website? Is that through a third party, donation platform? Is that, are you factoring in the cost of those into your budgets that you're making? All that needs to be considered when you want to go after reoccurring gifts like this. And if you want to make that part of your fundraising drive, these reoccurring gifts, it takes some setup and some work to be able to get this done, to be able to get people on board with the fact that you're going to be pulling money out of their account every month, and for them to budget that instead of just giving you at December when you are pleading for a year-end gift of $100. Hey, would it be easier for you if we just set this up as $10 a month? What they're not realizing then is instead of $100 at the end of the year, that's $120 because you're talking $10 every month. I'm an accountant. I can do that math in my head, but I think, you have to have the underlying systems in place to be able to do so. So if you're on the fence about upgrading your donation system or having some kind of digital giving, this might be the thing that tips over and you need to look into it.
Thank you, AJ. That was a lot of good points. So the next article, I believe, is from Mark.
Yes. My article is called Amazon Business Becomes Nanoe Enterprise Partner. So I'm not shilling here for Amazon, but if you remember early on in the podcast for our longtime listeners, we talked about some resources and some things that might help your nonprofit and places to go to increase your leverage with different nonprofit services that you can get by being a nonprofit. Amazon was one of those ones that we mentioned early on with their Amazon Smile program. Well, by them entering the National Association of Nonprofit Organization and Executives, which is an exclusive organization that you need to be invited into, apparently, they're creating some more benefits to their Amazon nonprofit program. And I just wanted to bring this up to bring light, because whether or not you love Amazon or don't love Amazon, there are a lot of people out there who are using Amazon Prime, a lot of people who regularly buy things online, and it's just kind of the nature of society today. So signing up your nonprofit with the Smile program, whenever anybody who contributes or participates in that, instead of going to regular Amazon.com, they go to smile.amazon.com, and a portion of whatever they purchase then can go to the nonprofit. And while the amounts might be small, if you get enough of your donor base to do this, even checks of $100 a month still help improve your bottom line. So with this kind of step up, some of the things that Amazon does for nonprofits, just so you're aware, is they can create a multi-user tax-exempt account for your organization. They can give you a discounted Prime account if you want that. They can even provide you with a live Amazon nonprofit business advisor, if that's something you're looking to do. And then, of course, as we talked about, you can have access to the Amazon Smile program. There are 75,000 nonprofit customers and growing in Amazon right now, and including 28,000 faith-based organizations. So if your church is interested in doing this, I think it's also a great opportunity there, because in this environment, every penny helps. And if people are buying at Amazon anyway, especially if you're not that keen on Amazon, well, getting people to take money away from Amazon should be a great goal for you as well. What do you guys think?
I thought it was an interesting article. I know that I use Smile when I do my Amazon purchases and have it kind of set off to the organization that I chose. But what was interesting to me is that I didn't know about it for the longest time until I think it was in passing. Someone said something, and then I kind of looked into it and I was like, oh. And I think one of the things that I would suggest is that, to your point, Mark, you don't necessarily have to encourage the buying through Amazon, but if you do, why don't you go ahead and use the Amazon Smile and tag our organization and be a part of that? Because it does, you know, it is like a small percentage. I don't remember exactly what the percentage is, but if you have enough people, or you have people who solely purchase their stuff on Amazon, it becomes, you know, can become a significant amount at some point in time. So it's not a, you know, a bad thing to kind of go for. I think that increasing the awareness about it and encouraging folks to at least know that you're on it, or, you know, somehow kind of increase the awareness of it would be a way to go. What about you, AJ?
Yeah, I've actually been involved with some organizations that use the smile as a link, and they receive money from it. And even though in the article it mentions 0.5% of all eligible sales, and even though that sounds like pennies, it can add up to a significant amount of money. You know, a couple $1,000s a year, which. If in the interesting thing is there's not much behind this that you need to set up for donors. You know, it's a great option if somebody says, hey, I don't have money to donate, you know, like we just talked about reoccurring gifts, $5 or $10 a month. Well, do you buy things on Amazon? You know, can you use our Smile link in our website, or, you know, here's our Smile link. Can you just, you know, when you're buying things from Amazon, link us and we get a portion of that. I think it can be a good alternative, and people maybe feel okay about shopping with Amazon, maybe if they wouldn't have, but it definitely helps, I think, in the long run. But really, I think what this article highlighted is there's a lot of nonprofit programs with larger like tech companies and businesses outside of Amazon Smile program. You know, we've mentioned the Google AdSense grants and Google grants that are available that are, you know, I don't see a lot of organizations take advantage of that. And so I would say, you know, if you're looking for something like this, or somehow to bolster your fundraising efforts, you know, to take a look at the options out there that are available to nonprofits, because they're vast. You know, I think we could even do a discussion topic at some point about that, or I think we have in the past. But yeah, go check our prior episode to check that out.
Yeah, and I would just to piggyback on that, I would say if you have some other resources that you want to add on, we welcome you to tweet them at us at ProfitlessPod, or to include them on the comments on our YouTube video. AJ, I think you have another article for us.
That's right. This one's actually from Entrepreneur. 3 most common ways to transition your nonprofit to a for-profit business. So I guess it's easy. The author states it's easy to go from a for-profit to nonprofit. That might be a subject for a different day, because I might disagree a little bit. But going the other way is not. So he lists essentially 3 ways. And what he's talking about is taking a nonprofit and bringing it to a for-profit, taking a nonprofit and transitioning it to a for-profit. And essentially there's 3 ways to do it. You can license, lease, or rent the assets is what he's talking about. And he kind of says that the pros to this is it's quick and easy. It provides you with immediate access to the assets that you need to do the business. The cons is you're managing multiple entities, because the MPO at this time doesn't go away. It's just, you know, essentially ceasing its operations and leasing the assets. And that might have tax consequences, because if you're leasing assets, you might have unrelated business income that you now need to report and pay for through the nonprofit. So, and it might, if you're not doing any longer, if you're no longer, the nonprofit is no longer doing an exempt purpose and it's just leasing assets, your 501c3 or whatever your 501 designation can be revoked in certain situations. So that's just an aside to the article. But the next one is a complete asset purchase. So essentially what it's doing is it's taking the nonprofit and purchasing the asset. This is actually the direction that his nonprofit took. And they needed, you know, this one, I guess you need, or not guess, but you need, and I would suggest in any of these have counsel, meaning legal and accounting team hired to be able to, you know, wade through this kind of transaction. So the pros, he says to this one, is you own the assets once the process is approved. The con is it's the costliest of the different routes he's saying. This route also takes the longest of the 3 to accomplish. So then his last one is a full restart. And he's essentially saying he wished he would have done this, but essentially what you do is you wind down the nonprofit and then you wind up the for-profit business. And it's a totally new entity. You know, there's not, but the pros to this is it's the cheapest route to undertake. You don't need, and he says you don't need to hire any counsel and can pretty much walk away from what you had built to date. The cons are, of course, are the perception that you use donor assets to build something, get traction, and then use it with a profit motive is poor. However, if you're generally doing it for the greater good of the mission, you couldn't care too much about that. So the article kind of talks about this complete shutdown of a nonprofit and then a move to a for-profit entity. In my experience, often what happens with a nonprofit is they have a segment or a piece of the nonprofit that is essentially acting like a for-profit company and is spun off. And that is a much different kind of situation than what the article's talking about. And often what you can do is the nonprofit can sell off that piece and bring it in as unrestricted income for that piece of that. So I would say if anybody's considering this nonprofit to for-profit switch, this in the way he talks about, a full restart, you don't need any counsel. I would say I call BS on that. You always need to consult a lawyer, if it's even just a consultation, a lawyer and a CPA to understand the legal rights and the accounting rights behind spinning up and shutting down a nonprofit and a for-profit. And you need somebody with expertise in that. But I'd like to get Mark and Tammy's take on this and just let me know, maybe I'm way off base on that and they don't need legal and accounting counsel if they're doing a full restart.
Yeah, I think you not only need legal counsel, I think you need PR counsel because as somebody who's a big advocate for nonprofits, the whole thing of switching a nonprofit to a for-profit just leaves a bad taste in my mouth, right? Because especially if you're one of those ones who donated to the nonprofit. So you got it up and running and successful, and now they're going to turn for-profit and potentially use some of the assets. I think the article mentions that. And, I think in future weeks, we probably should delve into more of a deep dive as to why somebody would want to do this. But I think tread lightly because, perhaps shutting down the nonprofit and restarting as a totally different entity that is unrelated and there's no name confusion, et cetera, might be the way to go. Because otherwise, you're going to have a lot of donors out there going, wait a minute, this is nonprofit. Am I giving to something? Am I not? Where is my letter at the end of the year that gives me the tax write-off for this? And all those different factors that come into play. I mean, this is a sticky topic that's just rife with problems. And I agree with you, AJ. Bringing in legal counsel is a must because if you're going to do this right, you're going to have to please taxing agencies, donor bases, the public at large. There's just so many different factors involved here. And I understand nonprofits fail just like every other business. And sometimes this is the only way out is to liquidate some assets and try to recover what you're doing. And if there are some aspects of a nonprofit to still be salvageable, then this is the way to go. And I think you also alluded to sectors of your business that might not be serving the nonprofit mission, what some might call the unrelated business income, right? The UBIT might be something that can be spun off because it's not dealing with the mission or vision of the nonprofit in any case. So I would say let's put a pin in this, how to do it, and talk about why in future weeks. But Tammy, what do you think of this article?
I agree with both of you. I think that not only do you need legal advice and accounting advice and the how-tos of everything, the PR role is going to be huge in this as well. Because, to your point, Mark, I think we do need to dive in as to why a nonprofit could do that and how they do it successfully. Because there could be reasons why it makes more sense to go ahead and turn it into a business and maybe generate more revenue and still supporting the mission and the purpose of the organization, but just in a different way. But I think it's easier said than done. And so you really would have to dive into more details and to look at that. One of the things I thought the article stated was that most of these transitions fail. And because it's poor timing, it was managed poorly, or they made the wrong choice of how to do it, or there wasn't really a product out that was needed. And to convert the donors to buyers could be challenging too. So what I would say is that, anyone would really need to really think about this and invest in the legal, accounting, and just the planning part of this process to really think, does it make sense? And if it does, then, that's what you're going to have to share that with your donors or your employees or, all of that kind of stuff. So maybe for the next article, because this article did reference another article about why a company or nonprofit may want to do that. So that could be kind of a leading article that we can do for next week.
Sounds like a plan. I'd love to get into that. So I'll earmark it and put it on our discussion panel for that. Speaking of discussions, Mark, do you have our discussion topic, roundtable topic for the week?
You bet. You remember last week we discussed the do's and don'ts of grant writing. Well, we're going to continue in that vein of do's and don'ts, and we're going to go a little broader with bringing in money in your organization. We're going to talk fundraising do's and don'ts. Fundraising, as we've mentioned, is a tricky subject. Different nuances and ways you want to fundraise for your organization. And there are some pretty standard do's and don'ts of what you want to accomplish and bring in your organization. Tammy, you want to start off our roundtable with some good ideas here?
Yeah, so I'll start with some do's. The first one I would say is take it one step at a time. So fundraising is a difficult thing. It can be a really, massive thing. It's also hard to ask, but you have to kind of take it in little bite-sized bites to go ahead and make it successful. And I would say the first couple would be obviously take it one step at a time, go local, think about what you have in your local environment and do what you'll say or do what you say you're going to do to make sure that people are you're asking for money and you're asking it for a particular reason, then make sure that you do whatever that particular cause is for. So those are my first ones. What about you, AJ?
Yeah, I think the big one when we were kind of discussing this pre-show was, I think when you're doing fundraising, I think don't be too judgmental. I mean, often people, if they're giving even $5, they're really giving out of their heart. I mean, that's $5 that they're parting with that they earned in some way, and they want to support your mission and vision. And that $5 could grow, as they grow financially. So I guess don't discount somebody or be too judgmental on how much money they're giving. And the opposite side of that is if they give a large donation, this person, has given you a lot of money, but they're no more important than the person that gave you $5, because that $5 donor and this could lead into volunteers. They may only be able to give $5, but they want to do more, and they come in and they have an expertise that the nonprofit can benefit from, or they're part of your volunteer team. So not only are they giving money, but they're also giving time, and they're giving good word of mouth. So you want all of your donors to be engaged, whether they give $5 or $5,000. So I think realistically, you want to acknowledge those small donors as well as the large donors, and make it a reoccurring thing, that if somebody gives a gift, you need to acknowledge it and try to offer them other ways. Even if somebody can't give any money, that's a good opportunity to talk about volunteer opportunities at your nonprofit. Can they serve some other, some other way other than just handing over dollar bills? So what about you, Mark?
Yeah, this one is kind of basic and fundamental, but it's something you always have to remember. Make the ask. Make the ask. Do it. There's no harm in making the ask. If you're not asking, people are not necessarily engaged, and they're not necessarily knowing that you want funds for a particular program or even for your general fund. So be passionate about it when you're making your ask, but don't be afraid to go out there and ask. And don't just ask for money. Ask for volunteers, ask for in-kind goods, ask for what your organization needs. These are tax write-offs for people, but more importantly, these are helping the organization in ways that you need help. And that's one of the benefits of being a nonprofit, is that you can ask and people expect an ask. If you're no longer asking, people think you don't need it or they're not staying engaged. Now, I would say the flip side of that is don't ask too much, right? There's a fine line to be done here, right? Let's just say on the for-profit side that you're a car warranty company. Do you want to send somebody a voicemail every single freaking day that their warranty is expiring on their auto, no, you're just going to annoy people. So on the nonprofit side, right, make sure your asks are pointed and that they're timely and that they come with the passion and the mission of what your organization is really trying to accomplish.
And I'd like to add to that too. I think know your donors. And I know I say this quite a bit on previous podcasts, but understanding who your donors are and the way that you can ask for donations or in the manner in which they want to be asked, because I think sometimes being passionate and being, telling a really good, compelling story is great. But on the flip side, you don't want to be overly emotional or overly aggressive or, those types of things. But you really need to know your audience and know your donors in order to figure out how do you make that ask. Because I would say for the most part of any person who is part of an organization, it is difficult to ask for money. And it's difficult to continue to ask the money where it's like, I know I asked you this last year, but we're having a fundraising campaign. Can you please donate again? Or now I'm on a different organization. Can you please do that? It's an art, I think, in terms of how do you ask those questions and get those donations. But I do think that if you study your donors and really understand them, then it does make that conversation easier. And being able to doing a repeat ask makes it easier too, if you know and have a relationship with that donor. What about you, AJ?
Yeah, I think following up on what you said, you have to acknowledge donors. And to do that, I guess, this is going to be me on my soapbox again about getting digital. If you're a paper and pencil kind of organization, you're behind the times and you really need to track where your donations are coming from. With Tammy's point of identifying and asking the right way, you need to be able to identify who your donor was, how you got that donor to donate. You need to be able to recognize that donation and thank them for it in some way. And then you need to be able to follow up with them to make sure that it's not just a one-time thing, like they were just throwing money in a hat on a street corner. You want your donors to be involved, and you need to know how they got involved with the organization to be able to target them again. And I hate to use the word target, but you want to keep them involved. And so having some kind of donor database, I wouldn't suggest trying to do this in the accounting system for individual donations, because it can be a nightmare if you have 5,000 donors listed as customers in your accounting system. You need to engage some kind of outside donation management software to be able to cultivate and to maintain a nice donor list of who's donating, how much they donated, why they donated, and the restrictions around those donations. So the do is get yourself some kind of donor software. The don't is on the back of a paper in the donation office. You have written down on one of those old ledgers who's been donating and why. You need to make this digital at the very least. Have some kind of reporting mechanism to be able to show how much those donors are coming in. If you're in an audit too, you want some kind of backup between the development department and your financials. So please use donation tracking software and not just entrust that your accounting department or the back of a notepad has all that information on it. So
yeah, and to piggyback off of that, AJ, I think targeted donations is the key, right? Because you might have some potentially elderly donors who respond best to a paper donation request with a self-addressed envelope in the mail. But if you were to spend the cost to send that out to all your donors, it might not make sense, right? So figuring out in that donor database, not only why they're contributing, but how they're giving the money. Like this particular donor likes to give online, this particular donor likes to, give at a gala, whatever that looks like, so that you can better target the organization and the needs so that you're saving the fundraising costs and really getting the money you need. The other do I want to just kind of mention here is do use your internal resources and structure. And in this case, I'm speaking of the board, right? Because we've mentioned this in previous podcasts. These can be your big guns, right? They can know other donors, they can know other organizations and help you bridge the gap between yourself and other wealthy donors who might not be connected to your organization. And using your contacts to find other donors is the smartest way to go about it. Word of mouth often is the best way to get donations in any kind of business, right? and revenue in for-profit businesses. So make sure you're using those contacts not just for the ask, but for the connections that they can make with other people.
Thank you, Mark. I think those were all the points that we have are really good. The one last one I would add is to make sure you share the news, whether it's good or bad. Share the news with the donors in terms of, how well the organization is doing, what type of giving they're doing, how it's helping people. Really share that information. And if there is, bad news that your nonprofit is facing, share that as well, because being open and honest and transparent with donors is really crucial. So with that, I just want to thank you all for joining us on another episode of Profitless on Purpose, the nonprofit focused accounting podcast. Please hit the like and subscribe buttons if you're watching this on YouTube, or rate us on your favorite podcast app. Check us out on Twitter at Profitless Pod. We really would love to have your feedback and get any new ideas for upcoming shows. And at the end of the day, thank you very much.
See everybody.
Thanks, everyone.